60 seconds and introduce my colleagues here. I'll have them introduce themselves, and I got a very interesting international group of people. I'll start with Constantine. If you just give people a thumbnail sketch of who you are and what you do, Constantine.
Yes, hi. Thank you for the introduction, David. Constantine Kogan. I'm a partner in BitGold Capital, which is the first fund of funds in the crypto space. Do a lot of research in the space, contribute, articles, contribute to such great conversations with fellow colleagues, and happy to learn from you guys.
Terrific. And Peter Borovich.
Hi guys, thank you so much for having me. Thanks to the Blockchain Center for literally hosting. So behind me is Zap, so I'm not affiliated with Zap, although it says Peter Borovich, zap.org. I'm just at the location, and DeFi projects are on fire. That's what I know, and Zap is one of those projects that is on fire. I'm not an investor. Anyways, what do I do? Right, that's a quick ad. I'm a co-founder of Ronin AI, which is a project behind artificial intelligence trading for cryptocurrencies. So that's pretty much a neat collaboration of artificial intelligence and blockchain technologies. That's what I do.
Terrific. Thank you, Peter. And then Morgan?
Hey, Morgan Hill. I run a small quant fund called Addis Capital. We trade pretty much just the broad crypto market, so the top 10 coins at this stage. Some point we might do VC, but for now we're focused on quantitative strategies, trading in and out of the markets, looking for alpha when available.
Terrific. Thank you, Morgan. I was going to, just so for those of you that don't know me, I was vice chairman of the NASDAQ stock market. I run an investment bank. It's in the cloud called Wield & Co. We're active in blockchain related ventures, wide variety, among other things, very traditional ventures. And I think probably my greatest notoriety is for having written papers that on market structure that led to the Jobs Act in the United States. Terrific. But one of the topic today, which is a little bit off what we normally talk about, is I want to talk a little bit about myths and sort of the potholes. Every major technology shift has them. If you go back to the internet in particular, I mean, there were a lot of really kind of crazy ideas that were being pursued that weren't commercially viable. And so I'd like to talk about a little bit about what you guys are seeing in the marketplace right now that is apt not to bear fruit versus what will bear fruit and why, in terms of, and obviously still, if you're in the right niche, it's tough enough to run a business and to succeed because there's a lot of competition. But what are the things that are sort of chasing the block and in general that probably won't go anywhere, and why? If I can, let me start with Constantine.
One of the things, so the myth, we start with the myth, right? Just
right.
To make sure. It's hard to say. We're talking about like a very big industry, right? So I think I would take the angle, a certain niche, which I understand better. It's more of a hedge funds and investor. I guess right now, one of the biggest myths that it's impossible to raise money during the COVID time and pandemics. I speak a lot with fellow VCs in the space, and I do know that they still invest in great projects, and it's all about persistence. It's all about the passion. It's all about the common sense of the projects that are, actually adding value to the ecosystem. So this is number one. Number two is to say that there is a myth that somehow, like blockchain and DeFi is not like relevant anymore with the global recession. I think we see a lot of great projects are actually taking over, like in a special remittance market. The stable coins are actually like increasing in volumes, and they perform in certain ways better, like programmatically. They're more transparent. They're better solutions in transferring the value. And there are a lot of, I would say, a lot of myths, but I would take two, and I'm happy to hear from my fellow colleagues and then add.
Yeah. Let me temper, and I just want to ask you a follow-up question on that, Constantine, about you just can't throw it up against the wall and get financed right now, right? It's if you go back to 2017 in the height of the ICO craze, right? I mean, people were throwing anything up against the wall and it was getting financed. We won't get into a debate about whether or not it was legally financed, at least in the United States. But the fact is people were just throwing money at the sector. Now, would you agree that people are looking at the quality of the project, and it's become much more akin to financing any other emerging technologies? They're looking at the quality of the team, the quality of the project, whether or not it makes business sense, what the scalability and the return on investment potential ultimately is. It's a much more rigorous process than we were seeing in 2017. Is that fair?
100%. You nailed it. I have also a YouTube and a podcast which I call Holistic Investment, where I interview a lot of investors. And recently I spoke to Ash Egan. It's actually going to be next week. I'm releasing it. He's a partner in Accomplice, which, they co-invested with a lot of great deals, starting from, Bison Trails, Falcon X, Coinlist, etc. The list goes on. And, speaking with a lot of investors of this caliber, yeah, they just, they just confirm that, yes, it's becoming more akin to venture capital. You first look at the common sense of the, of the project, you look at the team, you look at the financials, and yeah, it's no longer like, please throw me like $1 million for my tokens. And they invest a lot of in equity, actually, or a combination, hybrids, with tokens and equity. And I should say, yeah, there's no free money anymore, and it's not easy to get investment, but it's doable as long as you comply with all those requirements of VC world.
You're muted, Dave.
You're muted, David. Yeah.
There we go. Super. I don't know how that happened. Okay, Peter, what are you seeing in the marketplace that is a pitfall for people? What are people doing that probably just doesn't make a lot of sense, and if they look back on it 1 or 2 years from now, will probably not have been a good place for people to spend time and money?
I don't think I gotta say something bad. I don't think people change much. It's extremely difficult to be changed. And those of us who try to have any new year resolutions and quit in February or quit mid-January, we know that anything is difficult. So unfortunately, the investors are as irrational as they used to be, and it's always going to be the case. It's always going to be the case. Now, there are all kind of stories behind any investment, and for the most part, the stories drive those investments. And then when we look at the probability of success, I'm pretty sure the probability of success behind any investment, whether it's VC based or ICO based or stock based, is probably very, very similar in terms of very low, right? Like 1%, 5%, whatever that probability of success is. So unfortunately, at this moment, in particular, the DeFi projects are shooting up. Most of these projects have absolutely nothing behind it, just a hype, very similar to what has been in 2017. And unfortunately, that same thing will continue. 3 years from now, that will be yet another sector. Is the pump in the DeFi artificial? Chances are it is. We are actually analyzing Twitter at this moment behind some of the DeFi projects, and it seems like it's completely artificial. So some trends and patterns indicate that it's has not too much fundamentals behind it, and it's just relying on a series of investors and pretty much new money that has been lacking in the last towards crypto assets in the last couple of years.
So what's working?
What's working? A couple of things. Well, first of all, luck. Luck always works. So if you're lucky, you're great, right? So that's pretty much the only thing that is working for all of us. And we can say that Ken said it the best, right? In his book, Beat the Crowd. Let's take people and just everybody in the world just flips a coin. And if you get tails, you double it. If you get heads, you lose everything, right? And then people who got, for whatever reason, 10 wins in a row, which is 1 out of 1,000 chance, they'll start writing books about how they did it. They'll start creating and explaining the morning rituals that made them pick the right flip of a coin, and so on and so forth. At the end of the day, it's all luck. So unfortunately, I believe that a lot of that is just pure luck. Luck could be increased by trying more things and trying things out. What is, in my opinion, relevant is new technologies. New technologies could really drive that specific cash flow from other sectors that are more outdated, such as, say, manufacturing towards tech. Now, is that a fair reallocation of assets? Again, it's all based on the story. So I'm sorry for giving like so wishy-washy answers, but I'm pretty sure all of that stuff is lots of luck behind it.
Morgan, what do you got? What are you involved in right now?
I mean, right now I'm just trading. I try to stay abreast of the market movements overall. So I don't really get too much vested interest in all these projects, but I am very exposed to them. I mean, for example, there's been one that I was pitched like last week. Well, not last week, but like a couple months ago, and then regularly they've given me updates. And that was one called Tweeba. And it's basically like a consumer blockchain, and they're splitting it two parts. So they have a stable coin, and then they have more of like a utility coin that's for use on the platform. And the bottom line is that I can't really grasp why either coin is really necessary for the idea. It's more of a kind of a gimmick is what I feel. And I feel like a lot of these projects we're still seeing are in that mindset. They haven't adapted beyond that. Another one that I've been actually looking at investing in is Chainlink. I've been looking at it for like literally 6 months. But for the life of me, I just can't pull the trigger because I can't differentiate it between any other chain out there. And it's still, on the underlying Ethereum blockchain at this stage. I don't think their main net is live yet. And it's this situation where I see this time and time again. And then once they do go mainnet, it seems to inevitably be a letdown. And you could chalk that up to a failure of technology or, operational excellence, like, or lack thereof. But I just think that the foundation just wasn't stable enough. It was just, they're basing it on Ethereum, which itself is based on kind of a very tangential concept of, smart contracts. It sounds great in theory, but you actually have to make it work in certain use cases. And, I'm looking at how they're going to do this, and I'm not sure. Like a year ago, I wanted to see how all these ideas were going to turn out. And now we know kind of the answer, and that's most of them, it's unnecessary at best, fraud at worst. And a lot of them just, have so many issues to go, they have a lot of things they have to do right to accomplish the vision. So I'm not pessimistic on the whole concept, but I'm just being very cautious and pragmatic about, what companies we do look at. And also the overall landscape, I think, has to get a new piece of technology, whether that's cemented behind like a infrastructure, kind of like, let's say like, Goldman or JP Morgan decides that they're going to dedicate 25% of their server base or, servers to a crypto blockchain project, right? That would be amazing. Then you'd have a solid foundation of programming power. You could actually start setting things up. And I mean, what I realized, like someone was mentioning a long time ago, is that Ethereum is not really decentralized. It's decentralized in theory, but it's actually central to servers that are located at Amazon. And, that it is exposure risk. So I've been kind of following a lot of these trends over the last 6 months. So I think what's working on the positive is that if you do have a good stable coin and it's backed by something, that can be valuable. And I think there are some really interesting partnerships, developing on the infrastructure side and related to consumer products too. I mentioned to Peter, it's like Cash App has been an interesting thing to follow, and how they give rebates in Bitcoin and, sats basically to Satoshis because it's so small, but still someday it might be worth something. So I think those are the kind of things we're going to see, just incremental baby steps. But I haven't really seen any of the big ideas that have blown me away that I can back with faith.
I think that that's a good point. Is what's the business case for things, right? As opposed to like you're trying to create. I mean, it makes a lot of sense to be able to crash the cost of doing cross-border transactions, right? Because we're dealing with bits and bytes when we're in crypto, and the banks take a lot of money. Western Union, Telegram, gouges people in poor people, frankly, in places like Mexico that are trying to send money home to their loved ones. So CeeLo and folks are doing things that have a level of nobility associated with them, in the sense that trying to bring people who haven't had bank accounts into the economy, in that case by using their cell phones, or allowing people to transact cross-border and send money around at cheaper prices. But we've got a lot of, and I see this in our banking practice, where people want to tokenize something for the sake of tokenizing it, and it's not clear that just because you tokenize it, it's going to create any real liquidity, right? Just you've got almost universal adoption of securities accounts in the country, and now we've got early adopters with cyber wallets, and we're going to tokenize something, and somehow it's small, and what was small in public equity markets is it's going to trade better in the tokenized market than it would, and I don't think that necessarily passes muster. I mean, that's a lot of what we're seeing is are we too enthusiastic about taking a technology and applying it to things just to be able to say that we've got the shiny new object, as opposed to sitting back and asking, what is the business case for what we're doing, and why is it actually needed, right? Do I need to tokenize assets, a building, for the sake of argument? Is there an inherent advantage to doing that? Would be a question. And is it going to trade better as a result? What is the advantage? What is the compelling logic to why I need to own that? And I just throw that out, and maybe you can start running around. What compelling business cases are we seeing in the market right now for blockchain? And I don't care if it's distributed ledger technology, decentralized, or it's centralized at the end of the day, but if we're applying the core technology, what are the killer apps?
If I may, because I feel like while listening to you, if I wouldn't know anything about this space, I would be like super negative, like think like, you know what, screw the like, it's just not worth it. Look, I hear what you're saying.
So I'm an older guy, right? So I've been around, and if you go through the internet, and I can list off a gazillion stupid ideas that came out of the internet bubble, right? And crashed and burned. But out of that, we got Amazon, right? .com. We got eBay. We got iTunes. I mean, there's some pretty amazing and compelling kind of killer apps that really disrupted entire industries. And so that's what is it that's going to have that kind of longevity and legs and create that kind of value for people in the blockchain?
Well, first of all, like, I don't think anyone in the right state of mind would actually be able to reply this question, because it's just like, it's a very big prediction. We have to remember the industry is relatively young, right? We're talking about 11 years as opposed to decades, like, of the infrastructure, of the antiquated, like, if we just take the fintech as a use case, right? Where there is already a lot of established players on the market. If you need to have, like, registered custodians, you need to have prime brokers, you need to have exchanges, they're registered. And I'm sure David knows everything about, like, NASDAQ and all the connections with it, right? So now we're building, like, kind of a new alternative infrastructure. And I would stand to protect a little bit, like, the people who are actually brave enough to risk, because it's very important to differentiate, like, the speculators, the people who are just, like, making money on, like, some trading strategies, some, like, bots, or they're just, arbitrage strategy, whatever it may take. Like, this is one type of people who are just, they're benefiting, like, from the existing, like, ecosystem. And yeah, there's a lot of speculation, there's a lot of inefficiencies, so like in traditional markets. And there are people who are actually building products. They're building infrastructure, and they have a long-term goal to like maybe 5 to 10 to 15 years to completely, let's say, disintermediate, like, certain aspects of traditional financial system, right? Which it still has, like banking. You take banking, there's a lot of inefficiencies right now. So I can give you like some practical examples when I have time, but I want to say, like, like very simple example. When I was talking to Santiago Santos, who's in Parify Capital, right? He gave me a very practical example of Mexico and Bitso that is right now. I haven't verified these numbers, but according to him, like there is a huge percentage, like more than 15% of the remittance right now from the U.S., from the people who are working hard here and sending money overseas to their family. They're now using it through Ethereum-based platform, and it's cheaper than to use MoneyGram or Western Union. Right. Now, I don't say it's a killer app, God forbid, but I'm saying it's a very simple but practical example how, like, those cents, those dollars on a massive scale can actually change people's lives and, like, millions of lives, right? And save a lot of money. Now, I do believe that disintermediation and just the fact that as the first positive factor, and the second factor that basically it's becoming global, the access, for example, using some compound techniques and staking techniques, I can actually, instead of putting my money in Chase or Bank of America and like having peanuts and like, like on a dollar, right? I can actually receive like whatever, 8% yearly income just by staking my crypto and not actually having certain, or like even some smaller percentage if you're talking about stable coins, but still it's higher percentage than a traditional alternatives, right, that we have right now in the United States. So those are simple examples. We haven't seen them in that scale, but I do believe we do have a lot of them.
Yeah, when you look in the market and for distributed ledger technology in general, blockchain, so far the big volume of what's trading, if you will, is in traditional crypto, right? I mean, traditional. I use that word a little loosely. When you move off of that, probably the next thing that you're going to see go is the derivatives on crypto, right? It's to the extent that the regulators, what BACT is trying to do with the CFTC and embrace futures on Bitcoin for the sake of argument. And then the last thing that's going to wave that'll probably come into the market is this sort of tokenization or if you will, of securities, right? Because you've also got a whole bunch of friction points in the marketplace to acceptance, right? In the United States, if you want to do a securities offering or a token, tokenist security as a security, in order to get it into the broader system, you need to have a state securities exemption in the United States, and in order to do that, you have to get a listing on the NASDAQ stock market or the New York stock market, the New York Stock Exchange, which so far has not happened. You need probably to get those tokens into DTCC so that they can be reflected on somebody's account at E-Trade or Schwab or Fidelity or someplace else. And so there's a whole level of infrastructure built that's kind of holding all of that back that needs to occur before it really explodes on the upside. So right now, most of what I see, at any rate, in terms of success, is people that are mining Bitcoins, all related to crypto. It's lending against to short sellers and earning interest on that Bitcoin or Ethereum. I mean, or it's the coin and crypto market. It was interesting in the last, I don't know, 6 months. We started to see a move up in sort of secondary tokens, in secondary crypto, and I'd love to hear from you guys what's going on in the marketplace now that it's not just being led by Bitcoin any longer. At least it appears in the last few months. Is that a fair assessment? You're closer.
Yeah,
than I am. Yeah.
Yeah, the altcoin market, aka the shitcoin market, is doing really well. It's just going bonkers. And that's what I said. That's why I'm looking at Chainlink, because I thought Chainlink was a viable alternative. And this is one guy I've been talking to a lot in the crypto community, and he's been really enthusiastic about Chainlink. And I don't know now. I'm starting to think a lot of their partnerships that they they reported to have, I don't know if they're real, like if they're actually going to amount to anything. And I've already been burned many times, just like everyone else in this industry, by getting a lot of hope and enthusiasm towards a coin, only to see it fizzle out and the project go down. So I'm hoping that's not the case, but I don't know. I think so. It's gonna. I think honestly, what I've been going back to time and time again is that crypto is so small and it's a derivative of other markets. Like no one, very few people, maybe a few of us are making money, hard earned income that we can live off of from crypto itself. Most of the people in crypto aren't even close to doing that. And so the rest of the world is not even aware of this as even being a reality or an option. So you're talking about the bond market way up here with the central banks going to, the corporate bond, and then just a sliver of that is like the equities, and then just a fraction of that is like, the roughly few $100 billion in crypto, right? So when you're talking about that scale and you get down here, I think that does lend itself to a lot of market share to grow if people believe in it. And why wouldn't they? The Fed is printing fiat dollars, ad nauseum every day. So every time you don't do a move into something else, you're going to be losing, nominal value in your US dollar holdings, relatively. And they got rid of their reserve, their capital reserve requirement. That's at 0% now. I mean, it's ludicrous. So I don't really think that even if these coins are bad ideas, we're going to see like the same mechanism and same reality that played out a couple of years ago. I think that we're going to see people are already starting to differentiate between good ideas and bad ideas. And I think we're going to see some of the good ideas start emerging. And I don't know about the Bitcoin dominance, but I don't really see it going back to like 80 or 90%, anywhere close to that level. If there is kind of another leg down, Bitcoin will obviously be a, kind of the stalwart of the industry and probably keep things afloat, as people cash out of their existing altcoins and they buy Bitcoin. But I think we're going to probably see it holding out through summer. That's just my guess. I think there might be a few, dark horse candidates that even come out of, left field that we're not expecting yet.
We had a question that popped up on my screen, and I'm going to see if I get this right, but people were asking, what happens if the dollar crashes to Bitcoin, right? And what's everybody's view on that? I mean, the U.S. now, in the wake of COVID, printed an awful lot of money to sustain the economy, trillions of dollars, right? And we're not really seeing inflation, probably because the demand side of the equation is held in check with everybody, sheltering in place and so on and so forth. But the fact is that there's more money that's been printed wafting around the system, and yet Bitcoin really hasn't. You'd think if it was a store of value, it would have undergone a real large rally. It hasn't. So what happens long term if there's a crash in the dollar? What happens to Bitcoin? Any views on that?
I may comment a little bit if I may. So there is, I'm sure everybody's seen there's an interesting initiative. I think we can share it if possible in the chat, like, the Digital Dollar Project. There's a foundation and there's a partnership between Accenture, and the Digital Dollar Foundation. And they are looking to advance a certain initiatives like in the United States, so that the central bank will be completely digitized, right?
Right.
Now, there've been they issued several white papers already, and reports, and the board is pretty impressive. It's no longer like those ICO projects. It's very institutional grade, and I would say the grade of people who are joining the board are not just coming from traditional finance. So there is also people who are coming from political landscape, people who are coming from completely different spheres, who are trying to build up and establish, the new foundation and potential framework, how we will be able to programmatically control the flows and remove the disadvantages of the printing machine that we have right now with that, and try to somehow make it possible that it will be accountable and it will be controlled. Now, If you ask me personally, I don't know whether it's going to work or not. Like, even though I read the document, it looks like pretty, right? It looks amazing, but it's again hypothetical, right? And that's theoretically we'll have an interesting alternative, and similar that is doing China is doing the digital yuan, and about 16 different countries right now are the workings of digitizing their national currency. Now, would that save us, like from inflation or from like deeper recession that we're right now? No one knows. We definitely know that the majority of the more than 50% of the economists are saying that we are just in the beginning of the much deeper recession, and it's going to impact every single human being on planet Earth. Now, how would that look like? I wouldn't take responsibility to even talk about it, but what we do know now that the impact that we're seeing, like it's a cascade, the domino effect, like on other countries, which happened in 2009. They predict that it's going to be probably from 10 to 100 times, worth. And do we at least should try to programmatically use the ways that can model a new options, like a new ways that the public will be like at least like somehow auditing what's happening, not just like somebody's deciding the private company, which is Federal Reserve, like is deciding to print or not to print, or to as as was said, like not to decrease the interest rate, but we will somehow maybe vote, maybe have some say in this processes like that. That what I would love to see. Now, if that would happen, we don't know.
Peter, what do you think?
Let me jump in here. So the problem with Bitcoin or crypto not taking over is the fact that the question is asked in the wrong, like it's asked from the wrong angle. The question has always been, what is the killer app that will change the market? And that killer app, for whatever reason, has to be really smooth, extremely scalable, and has great UX, user experience, that Bitcoin, for whatever reason, for example, doesn't have. Most people think that it doesn't have those features also, although I think personally that it has everything already done. So the focus has been, all right, cool. So how about I look at the top 1,000 shitcoins, figure out which ones has some kind of momentum, join some pump and dump groups, invest my $100, and make $1,000, and feel really good about myself because I'm not able to go to the casino, because going to the casino is super expensive. And that is the wrong question. The right question has been, what does the technology of Bitcoin, for example, or decentralized technologies overall, really give me as a human being, right? So when we're talking about the B2B enterprise solutions that we're not discussing right now on this panel, sure, that's a little bit different, right? So here we have to talk about the, all the stakeholders involved, from the manufacturer, say, to the end user of the entire supply chain. When it comes down to, say, manufacturing companies, in healthcare, it's patients, in financial markets, it's the client. But when it comes down to B2C solutions, or C2C solutions rather, or P2P solutions, peer-to-peer, what we are given an opportunity to not just make money, but actually change the entire decision making. So the current system is, you go to work, you make some money, or maybe you start a business, you make some money, and then you hope for the best, that the economy doesn't crash. Right? Say that to well, Konstantin and myself, we are from Soviet Union, right? The origins are. So imagine those people with pensions that have been saved for years, and 1991, the entire ruble is just collapsed compared to dollars. So the entire savings are gone. And Soviet Union was the second or the first, whatever, one of the top two global empires, right? U.S. and Soviet Union. Now, Bitcoin has given us the opportunity to change the decision making, because at this moment, right, what do you invest? Stocks, bonds? You don't know what's going to happen. You don't know what Fed will do tomorrow. Like, we have no idea. And instead of trying to, to change the system, everybody's trying to friggin' pick the best DeFi stock right now, because they would like to double their $1,000 into $2,000. In my opinion, that's a shame. That's a disgrace. Now, the level of education definitely has been improving in the last couple of years, since 2017. And yes, decision making behind certain, ICOs has been potentially improved. However, the main thing is that every single person who is in this space needs to ask themselves is, okay, so pick one coin and actually download a wallet and actually sync that wallet fully. If it's Ether, sync the Ethereum wallet. If it's Bitcoin, sync the Bitcoin wallet and start owning your coin. There's no fucking excuse anymore, pardon my French, for not knowing how to use your own native blockchain made for you on your computer. There's no excuse. Absolutely zero excuse. The fact that you can go to blockchain.com and use this, fancy UX wallet, or some people use Coinbase Pro as a custodian, right, for their Bitcoins because they're scared to lose the password. I mean, that's child games. Like, let's face the reality. You're not going to change the system unless you're part of the system. And all you need to do in order to change the system is to download a wallet, wait for 10 days to sync it up, and watch 2 YouTube videos. 2-week investment of your time. Like, seriously. Now, if everybody in the world is doing that, like, say, invest $100 and actually buys Bitcoin, right? Mines Bitcoin, well, it's very difficult right now, buys Bitcoin from somewhere and stores in their wallet, the decision-making will change dramatically, because that action alone will increase the fundamentals behind blockchain, behind Bitcoin's blockchain, for example. It will make it potentially, well, first of all, it will create more nodes and more transactions. And maybe the question about scalability will finally be acceptable, because right now the scalability is good enough. For the current level of transactions, it's good enough. So that's why we're not seeing anything.
What you described, Peter, is a little bit of, you're still in the early adoption phase. To quote,
we are.
Jeffrey Clark's book, Crossing the Chasm, right? And until you get to the point where an individual can transact and it just goes, they're not thinking about, downloading a wallet, a cyber wallet, or this or that. It just goes. I think you've got a second and a third kind of leg up in the market that just happens because we enable a lot of demand to come into the marketplace in general, which is right now sitting on the sidelines for a whole variety of reasons, right? I mean, most institutional money is still not playing in cyber currencies. It just,
and David, one more point. So when we're talking about, say, apps, right? Say Angry Birds or Facebook or any of that stuff, the idea behind those apps is to become a herd of sheep, right? So the early adopters, create an account on Facebook, and then more and more people slowly do that. But Bitcoin is doing exactly the opposite. Exactly the opposite is everybody has to make their own decisions. Everybody has to take full responsibility behind their actions, and that's what's really behind, like, the blockchain technology behind Bitcoin is really not the game changer. The game changer is the socioeconomic factor, allowing all of us to make decisions and actually grow that, right? And that ecosystem must be built based on the independent thinkers, not sheep. And I apologize for using the term sheep, but unfortunately, that crossing the chasm that could be applied for a general app might not be applicable for the Bitcoin. So the education level has to be much, much higher.
And maybe I'll direct this at Morgan a little bit. But it was interesting to me. I was looking at how, as we've gone through these kind of shocks to the system during COVID, what different components of the stock market, how they were trading. And I was kind of fascinated to see, well, you kind of expect that energy stocks wouldn't do particularly well because we had that fight between the Russians and the Saudis on price that drove down prices and created chaos in the market. You saw that there were credit concerns in business development corporations, and so you saw and real estate investment trusts were lagging because of concern about occupancy. That all makes sense. The distributed technology stocks were all doing well, right? Because we're all working from home and we depend on tech. The one that really kind of I found interesting is gold, which has historically been a real safe haven, was doing very well and doing much better than Bitcoin was doing. And you would think that if Bitcoin was a store of value and had some of the characteristics that people early on had ascribed it to have, and an inflation hedge because of the inability of a central bank to print money, so to speak, you would have thought that it would have done better than it did relative to, and at least tracked. I would have thought, at any rate, let me rephrase that I would have expected it to do as well as gold, and it didn't. So maybe from a trader's perspective, an investor's perspective, Morgan, what do you see going on, and what does that say about how to think about something like Bitcoin over the long run? Does it change your view at all?
I mean, just so what is the gold market right now compared to, let's just say, Bitcoin, right? It's roughly, at least 20, if not 50 times. You're talking about, almost probably around 10 trillion all in. That's physical gold, like we're talking. So it's something where it's been around for literally thousands of years, and humans have been very well, obsessed with it for as long as people can remember. So you're not really giving a fair comparison to say that it's going to outperform gold. And the thing is, yeah, if people understand it and they're educated about what it is, how it works, and why it's needed, and how it can be more effective and efficient in a lot of the things that they're requiring it to do, then yeah, it will outperform. But most people don't, they're not that educated. They don't read everything. They don't write, and they don't understand even what a blockchain is. So there's a huge learning gap to even fathom the difference. And right now, we're so far from filling that. And we'll probably never, I still don't know how my cell phone works, right? And, it's something like I can't, if this goes down and I lose the front end on this, I'm screwed. I'm not going to be able to get in and tweak the frequencies so that it can call different people and, blot out the, through the code, the number to access the servers. I'm not going to be able to do any of that. I need the front end. I need a very simple to do that. Bitcoin is not even close to that simplicity yet, and that's kind of an issue. And like Peter was saying, there's going to be a lot of hiccups because for what it is doing right now, it's fine. But to grow to the next level, the world currency, which is where you start approaching like $1 million of Bitcoin, that's the level where we're not even close to yet. And to get there, we're going to have to take a lot of incremental steps, and there's going to be huge ebbs and flows. So yeah, if the US dollar does crash, here's my prediction if that happens. First, you're going to see a massive hit in Bitcoin because people will not know what to do. So they'll be trying to free up all their resources into whatever they can think of. And at the moment, when the dollar crashes, people are not going to be set up to say, oh yeah, no problem, I'll just switch over and accept Bitcoin from you. No, people are not going to do that. They're going to lose their minds. They're going to go back to physical hard gold, or they're going to go back to like coins or bartering. Those are going to be all preferable to Bitcoin because most people don't know how to use Bitcoin. Now, this is when the learning curve is going to kick off. Everyone's going to hit this rock bottom, and they're going to be broke, but they're going to have their skill sets, and they'll still have assets. The US dollar is just gone, right? So they have a couple choices. Barter, adopt a foreign currency, which would be a complete insult. And you know how patriotic the US is. I can't see us doing that. Or 3, you start looking for better alternative solutions, i.e. Bitcoin. And that's where you could build from that base, which is fortunately like a near rock bottom base, but you could build from there. And you could actually rise above, and that's when you're going to see the greater use cases in Bitcoin, and you'll see it recover and probably, you know, reach equivalent of what it is roughly today, or higher even. That's what I'd say. If we do reach that level, I don't think we will. I think it's still pretty much controlled by the government. They got a handle on things, but that's what would happen, because there is correlations, and there's this huge education gap, and we're not there yet to that world currency level. The infrastructure has to go in first. That's kind of the bottom line.
Raise a very interesting, which, you know, it makes me think that there's a tale of two markets here from a liquidity band perspective, where, you know, there are just certain things about Bitcoin is still not driven by institutions, because institutions can't put enough money to work to make it matter. Whereas, so if I've got flight capital and I want to have a store of value, there's probably not, the institutions are not driving into Bitcoin. They're driving into things in marketplaces that they can get size into. And that, you know, if it's a store of value in a crisis like we had in the financial crisis of 2008, you know, everybody was concerned about the solvency of the banking system. So what did they do? They bought US Treasuries and treasuries all of a sudden were trading below par. They were trading above par, so they were trading with a negative return because you were afraid that you couldn't get cash back out of the banks, right? So it was a safe place to hold currency, but you could get size done in the treasury market. So that's why it got used, and that's why people were willing to take a negative return just to know that they would get their money back at the end of the day. I mean, here, you know, you've got a crisis going on for a store of value, but you can't really make use, if you're an institution, you can't make use of Bitcoin because it's just not deep enough, right? So where are you going? You're going to, you know, I'm just saying, you know, you can get gold analogs and things in public markets, exchange traded funds and other things that you probably can put more money to work. May have something to do with why we start futures, gold futures. It may have something to do with the reason why you saw gold trading up and Bitcoin lagging, even though in theory, Bitcoin should be a pretty fair inflation hedge, but it just may not be, may not have the utility required yet because it's just not a deep enough marketplace. Can you want to react to that?
May I react to that? All right.
Go ahead.
Yeah, so I think it's also, it should be fair just to remind, you know, some of the people who are watching also that the Bitcoin was born in the crisis, and right now I think it's going to be another repetition of the story like of 2009, and it's still alive. It's the biggest crowdfunding project in the world, in the history probably. Like, so it's if you think about the price, how the formation of the price, it's built on trust. It's our money, like, or all the participants of the ecosystem, like, are actually making Bitcoin alive. Number one. Number two, I want to say, if it's fair comparison with gold, so we have to remind also that, you know, yes, there are certain properties of gold, like, that is, like, I would say, the legacy of the gold. That, yes, it's also scarce, it's also durable. So does Bitcoin. But what is not clear, that it's not portable. Like, did anyone actually hold, like, the bars of gold, like, you know, in the, like, near future, or maybe like in the past year? No, like, we just believe that it's somewhere in the storage and it has value, right? Or just because of the diamond rings, you know, or other jewelry, we believe that it's common, right? And as you know, Morgan mentioned, like, it took thousands of years to actually establish this status. But also, if we think about, like, you know, Bitcoin is fungible.
But by the way, one of the things I would just say that if you go back to the silver crisis with the Hunt brothers, okay, which is well before your time, but they actually took armored trucks of silver bullion and made delivery on it when they had to at the end there. That they're, you know, that the way these things are set up, nobody wants to take delivery of that hard asset. But the fact is that if you had to, you could. It's the sort of same, you know, belief that an exchange traded fund lives on, which is that if you had to take delivery or you know, possession or liquidate the underlying equities that made up, say, an S&P 500 exchange traded fund, the asset is there, right? So there's a belief. There's a belief that you can do that, and I think that these markets, look, everything is ultimately a form of consensus of belief, right? Which is that we believe, and ergo we put a price on something. I mean, Bitcoin is probably one of the most extreme cases of that because it isn't a fiat currency. It doesn't. You know, there's no government that says you have to receive this as a currency. It exists on a belief system, and but I think these other things, right, and particularly gold, we know fundamentally that it's backed by something that's a solid asset. Don't have any interest in taking physical delivery, but at least I know at the end of the day, if I had to take delivery of the gold itself, I could take delivery of the gold itself at some cost.
In theory.
In theory, that's the thing. Like, if there was already a big scandal when they actually tried to do the audit, like in some vaults in Singapore and then Switzerland, and they realized that the amount of tradable, like, futures and other, like, you know, derivatives based on gold, like, you know, was, you know, more than they actually had in the vault, right? So it's also not perfect. So it's still, like, you know, like, there is ability to counterfeit it, like, you know, in many, like, you know, countries in the Middle East and Africa to actually try to do that. So but it's not like a battle of exchanging the bad or good stories. What we're talking about, the properties, like, you know, just generally the ability to understand, like, what is going to be the digital future of the humanity and how we will be able to benefit. Not again, I want to clearly differentiate. My position is very simple. If we're talking about the speculation, who can benefit from it, like invest right now, buy $9,000 and then sell it when it's 10,000. This is completely different conversation. If we're talking about the potential to actually have an asset that is decentralized, distributed, and it's actually not controlled by one government, and you have an ability to basically freely move your money when you wish and spend them how you wish, that's an interesting experiment. And it's not a perfect experiment. There is a lot of flaws in it, 100%. But the correlation with gold and different patterns like that we see, like, when they actually are very similar, and why, answering your question, David, why Bitcoin was lagging, it just is because we're not ready. Institutions are not ready. But at the same time, I can tell you that, I would probably like also to take a stand that if you're not allocating at least some percentage of your net worth to Bitcoin, that's also irrational, because it's for the past 10 years is one like the best performing class, asset class, so it's also the diversification. It's also an opportunity to hedge your risk on multiple levels. Right. So there is pros and cons in every asset allocation. The strategies are not unique.
I actually think that particular point is probably one of the more bullish reasons for Bitcoin over the long run, which is that I do believe that there are lots of institutions that ascribe to the thesis that they should have some exposure to cryptocurrencies, right? Even though it's a small portion of their portfolio, and the hurdle has been the custody issues and just feeling comfortable as a fiduciary that I can't blow myself up and lose it for the sake of argument. And so I think that as those problems get solved, I think there's an expectation that at least some institutional money will come into the Bitcoin market, and in theory, that should drive up the value of Bitcoin. So I mean, I think there's a pretty good bullish case over the long run as we start to solve some of the infrastructure problems in this market. So I agree with the thesis, and I've heard it from institutions about there's a desire out there with people that I talk to that they would like to have some exposure to cryptocurrencies, and particularly Bitcoin as an asset class. It's just a question of, can they put enough to work, and can they feel comfortable as a fiduciary that it's in safekeeping, so to speak.
Also, the problem with custodians, right? I mean, yes, it's probably one of the biggest reasons why institutions are still not involved. But there's no excuse for emerging institutional investors to have some exposure to Bitcoins. Because yes, having exposure to gold through gold futures is great. Gold is stored somewhere there. But Bitcoin is stored on your flash drive. Create a system, create a protocol, make everybody responsible legally. Right? Like with no limited liability, with full liability, right? And actually go ahead and do this. It's a freaking flash drive. It is a flash drive.
Right.
Right? And a computer. Fine. You want to make sure that you're fully protected, a computer and a flash drive. Right? And you have full access and full control of your crypto. How difficult is that? Obviously, it creates certain responsibilities. Like I heard the story, literally from one of the Wall Street legends, as well. That the reason for that gentleman not to store his crypto was because he had a coffee drain on a password, and that was a signal from God that maybe he should not be doing this. Maybe he should not be storing it himself. Maybe he should delegate that responsibility to an exchange. But that's not a really proper way of playing this asset. And now the question is, okay, it's a game, or it's a balance between having a proper protocol regarding how to store your keys for crypto, which again takes, say, a couple of videos to watch regarding how this should be done, and then say 3 to 6 months discussion regarding pros and cons, and a proper system of how to manage it without multi-signatures available, without custodians available. It's really not that difficult. Some kind of diversification. Maybe even give it directly into the hands of the investors, right? And just tell them what to do and blah, blah, direct them. It's really not that difficult if there's desire. So there's a balance between that and full dependence on whatever the government decides to do. And while U.S. government has a lot of power, and I'm pretty sure that U.S. government will not allow Americans to get hurt throughout this crisis, but we cannot say the same thing about emerging countries. I can only imagine what kind of hell Russians will have to go through. I can only imagine what lots of countries in Africa will have to go through. I can only imagine what kind of hell Venezuela, Argentina will have to go through, and the rest of the, not the rest, but some of the countries in Latin America. Same applies to, say, countries in Eastern Europe, parts of the Soviet Union bloc, some Southeastern Asian economies, right? So we're talking about 2, 3, 4 billion people affected by COVID, where US and, say, Western Europe are, well, and say parts of, like, say, Japan and Australia, right? These guys will have some kind of protection, some kind of hedge due to relationships, power, military, etc. Right? So that's the balance between full dependence on the government, on whatever these guys decide to do tomorrow to your assets, and security protocols regarding how to store your crypto. And storing crypto is much easier than storing gold.
True. So, it's an interesting, question you bring up, and I just wanted to throw it out to the other panelists. I mean, what's the impact on the developing countries in general right now of this COVID crisis, and what are the implications of that? There's a lot of discussion in the Economist and elsewhere about the rise of poverty in many developing nations right now. Is this something that that in the current environment is going to be with us for a long time, and does that have a bigger, broader implication to the whole crypto space and demand and the adoption?
I mean, I've like been talking to a lot of people who have been working on projects in Africa. Some of my friends have been involved with like the Sustainable Development Goals from the UN. And I don't know. I don't really subscribe to that ideology per se, but at the same time, the projects over there, they're really innovative. There's a lot of interesting things that could come out of. I mean, you're dealing with small economies that have, a local warlord per se, and, a corrupt system that entrenches those with power to stay in power, even though they're probably not the best managers of the resources. And, with blockchain implementation, you'll start holding those guys accountable. And you could use, this is the interesting thing. So it goes back to what Peter was saying about, how far along we are on blockchain. So it's a push and pull, and that's what we're dealing, like Konstantin and I are dealing with the institutional side. There's the push from the clients of these funds that want to get exposure to crypto. Maybe they believe in it, or maybe they just want to see the crazy gains we've had compared to every other asset class. Either way, they want to get in, but there's all these hurdles. Now, do you pull them down or do you push them down? That's what we're trying to figure out. Pushing them from, the ground up, where you have the institutional guys finding solutions or ways to get in, or they're getting pulled in through, already set up infrastructure. So the interesting thing about countries that are in Africa, for example, not to name a couple, but some of them are working directly with some blockchain firms to implement systems that will be directly applicable at a government level. So you'll have it'll be a sandbox, but there'll probably be some proof of concepts even this year where you'll hear about, a payment system that's been set up that can manage like all the tax receipts for, small businesses and sales and retail for a country. And they're all audited on a blockchain, so the government can essentially have an accurate tax ledger, and they don't have to worry about corruption or any of that getting lost, because everything goes directly from point of sale into the system. So there's a lot of things like that, I think, that will be an opportunity. Whereas a bigger country like the US, forget about it. We're not going to be able to do that unless we switch over to a dictatorship. So we can't really rely on ourselves to, be the thought leaders for that. We're going to be the laggards as far as that adoption if we need it. So yeah, I think, you know, again, it's a double-edged sword, because there's a million ways these projects could fail, but I think there's a really good chance that smaller economies could lead the way out of this through the use of technology and projects that we haven't, you know, begun to even implement here.
That's an you know, it's an optimistic view. I mean, there's been something picked up in the media that talked about almost 500 million, you know, people being sort of thrust into poverty even more deeply. And I know the sort of most extreme case of poverty, which is the Brookings Institute published a number which projected that another 50 million people would be, you know, thrust into the deep end of poverty, which is a number pretty scary. I think it's like living on $1.90 a day or some number along those lines. I mean, it's a.
I mean, my point is just, I've looked at, you know, the numbers of like the last 30 years and what the UN has actually done for poverty in these countries, and, you know, the IMF and the World Bank. And in a lot of ways, there's, you know, an argument to be made on the negative that they're basically loan sharks, and they get a lot of these countries addicted to aid and cheap loans. And when you start taking that from a fiat system, you don't have the hope to repayment, because you're operating from the bottom already, and you're supposed to somehow, you know, overcome everything to emerge. But that's not the case. That's not reality. That's not how humans work. That's an anomaly. Occasionally, sometimes it happens, and it's celebrated by, you know, everybody who's in authority, the media here in America, because it's a success story. But by and large, most of those countries are still struggling. They're still controlled by, you know, despots, and, you know, it happens around the globe. It's, you know, you just got to look at like Tales of an Economic Hitman, like books like that explain exactly how it works. And blockchain is a way out of that system if they can manage to navigate. So I think that's a positive, you know, path they can pursue.
I mean, your point, which I think is the right one, which is, you know, who do you lend the money to? If you give the money to the despot, and then you put a burden on a society, and they never receive the benefit. If you make the loan directly to an individual, and particularly a woman, because the women have proven time and time to be much more diligent about protecting the household and their kids and so on and so forth, and the guys have been, you know, at least have a history of being much more much less sensible about about, you know, borrowing money and putting it to work. Maybe you do something which is transformative, right? I mean, it's by completely circumventing the entry point, which has been centralized governments in developing countries, and going directly to the people.
If I may add to this, because I've been researching this question a lot as well, like from the UBI standpoint, Universal Basic Income, and I'm a big fan of this concept. I think that there's a lot of initiatives right now in the smaller countries, like, you know, Georgia would announce that they want to try it. There's several countries in Africa, actually in Switzerland, it's like small cities, small towns. They tried it already, and it was like pretty successful. So, I mean, we might probably want to assess all the risks trying this on a massive scale in such economies as the United States, because there are certain risks involved. But generally, there's no reason whatsoever why we need to have poverty in the world right now. And there is such a huge gap between developing countries and the countries that are in so-called developing economies, right, or third world countries, right, which I hate this connotation, but there is enough food, there's enough wealth, and the only difference right now we're talking about, like why it's not reaching out the right people, is trust. So we're talking about like the potential decentralization of trust, where you don't have to trust certain people. You talk about microloans, right? We have a good example of, in traditional world, Kiva. I'm sure you all know this project where they provided microloans across the world, and it was large, like huge success, right? And I donated, like, you know, several times, you know, to people who I have never seen. Why? Because somebody validated a person who, like, in Senegal, who needs to buy a cow to, like, for their farm, and, you know, but I've seen the presentation. I know that somebody validated them, and it works. So imagine it's at a large scale, where we're going to have programmatic ways so that the money will reach directly to the, you know, people who want to run a business, or just support them. Like, you know, there's multiple ways to support people, David, as we mentioned, who are earning like $1 a day, or $30 a month, which is ridiculous. So if every family in the United States would literally take at least one person to be almost like a guardian, like, their supporters, we would already see like a huge, like, let's imagine like 100 million people who would be having completely different opportunities in their life. So this is doable. We already have technology. It's more about the question how we negotiate and how we will make it happen, and not just theoretically, but practically as a humanity. Because I think all the latest circumstances that we see in the world, like with this virus, with instability of the economy and etc., is just shown how we're not ready, like, for this integral changes. It's not about like the technology is not ready. I think it's more deeper behavior psychology questions.
Yeah, I do think, Konstantin, that the whole area of microfinance has a profound set of legitimate applications in the block, that you're able, whether it's cross-border, it's to individuals, it's the tracking, it just drives down the cost of all of this record keeping, identification, authentication, the kinds of things that I think the technology actually has a really profoundly profound use for. And I would be cautiously optimistic that one of the things that emerges from the primordial ooze, the way that eBay and Amazon did from the early days of the internet, is finance models that are helpful to people that are in impoverished nations. But we'll see. I mean, but I do think that it's got a long ways to go, and there'll be an awful lot of development around it. But that really could be transformative for the better, because of the ability to create accountability, right? I mean, once you can start to create real identities, and you know who you're dealing with, right? And you develop the equivalent of a credit report or a track record at very low cost, then you can finance people to purchase those cows. And right now we don't have a good mechanism to do that kind of finance on a grand scale. So anyway, it's very interesting. What else out there is really that excites you, that could be potentially transformative with the technology, that you think is real? I'm going to put you on the spot.
Let me just say, first of all, whoever is watching this, and we've seen the feedback that 7 people are watching this. Well, we have some Twitter viewers and YouTube viewers, I'm pretty sure. But yeah, we don't have 20,000 views yet, unfortunately, right away, immediately. Potentially because there are no giveaways with Bitcoin. Hi Ethereum, hi Vitalik. But long story short, if you guys downloaded, like whoever is watching this, if you haven't downloaded the Bitcoin Core, download Bitcoin Core wallet and just emerge into the magic of this amazing technology of Bitcoin. It's really freaking cool. And do the same thing with Ethereum. It's really amazing. It's amazing how you can download it. You don't need any barriers. All you need is a Wi-Fi connection and electricity. Sync out for 10 days if your computer is as bad as mine. Or it might take you 5 days if your Wi-Fi is a little bit better and you don't live in New York City and your Wi-Fi is actually okay. So it might take you anywhere from 5 to 10 days to sync it up. And then you make a transfer of BTC. Say, first you do, a transfer from some outside of external wallet, say Coinbase Pro, to Bitcoin Core. And then you do a transfer from Bitcoin Core to your buddy. And you'll watch how it will get confirmed 20 to 60 minutes later. In some case, it might take hours, but typically 20 to 60 minutes later, it will get confirmed. Sometimes very fast, sometimes 15 minutes. And you can actually transfer the value without anybody telling you that this value cannot be or can be transferred. And it's 24/7. And this magic can be achieved by simply downloading Bitcoin Core. It has been available since 2009, 2010, really. All right, so that, I think, is the biggest problem. You're looking for a killer app that you can just forget about, just download it and it does the work for me. It does not exist. If somebody is doing an app like that, they will have full control over whatever you're doing. Full control. It's like going to a casino. Casino is great for a reason. It's so beautiful. It's so great. You go walking in there, right? It's a paradise. Everybody is offering you a drink and free sushi and stuff like that. Why? Because they want you to lose money. They want you to lose money. It's done on purpose. And when you have really bad UX, chances are it's actually super useful. It's actually probably extremely freaking useful. But I also compare like clothing that has been 20 years ago, 30 years ago, super durable, and clothing now that rips apart like in a month, 2 months, right? Because it's useful for a reason, because they want you to pay more money, right? So let's not try to get into the forests of, hey, this and this, we're looking for this killer app that has to change the world. It already exists. You guys have to start adopting it. It's already existing. That's, I think, should be one of the messages from my end for this panel.
Okay. Well, look, I don't. Yeah. I was going to say just to the people that are listening, and if you've got questions, please. Let's see if we can't run through some of them. And somebody asked, is this the quintessential question again? What happens to crypto when the Fed can't print money?
We've covered this already.
Yeah.
Zero Hedge, can I jump in? Zero Hedge wrote a great article. They said that when the German franc fell, you could have bought a mention for $100 worth of USD backed up by gold. That's a great article. I shared this with my community. It took me a day or two to completely digest it. I was reading sentence by sentence from that article that was published 2 weeks ago. Same thing might happen. When everything falls, and it might fall at any point of time, rare assets, gold, silver, precious metals, Bitcoin, could have had such high purchasing power that whoever has one Bitcoin could potentially buy the entire mansion somewhere, in Russia or Germany or Africa or US or everywhere.
Yeah.
Okay.
Yeah, I think that's after we recover. I think there's going to be an initial sell-off when people panic. But yeah, I think basically anything you think is going to happen, it's going to happen just slightly different. And that's going to be enough when you're dealing with rioters outside, or, the government calling you and telling you we need to, have you come in for talking or whatever's happening. That's going to be the least of your worries. Just totally, most people will dismiss it. That's a problem. And that's what happens. And that's why, the rich people who already have enough, they have the least to worry about. They can scoop in and buy things for, pennies on the dollar. Hopefully, those are for paying attention in the crypto space. We can avoid that problem if it happens. I don't know. That's just my thoughts. Well, yeah, buy Bitcoin, guys.
Not a financial advice, buy Bitcoin.
Well, does the transportability, if you will, of Bitcoin is probably one of its real differentiators, right? I mean, you're decentralized. Yeah. You can't stop it. You can put it on a fob and take it with you, and you can go halfway around the world if you have to, and then you can turn around and enter it into the network and sell it.
David, you're talking way too limited, man. You got to think a lot bigger. Halfway around the world. How about halfway around the universe?
But let's talk about this right for a second. Let's take a super critical example that hopefully will never happen, but it probably will. Let's assume that major governments of this world go bust. Printing too much money, hyperinflation, money's worthless. And now a decentralized community of people have Bitcoins. What do? Where do they go first? First of all, they probably go to the militaries and try to bribe them and try to move them on their side. And once that happens, then there's a new era, new control that is taking place. But the fact that since people with actual money are more or less decentralized, based on locations and stuff like that, then we're talking about new kind of decentralized military. And therefore, the old regimes that are controlled by pure geographies, right, on the map, they might stop existing at some point of time. Obviously, that's a drastic example, but that's exactly what can potentially happen, because the storage that could be, as David, you mentioned, moved globally is still located in a pretty decentralized fashion. Yeah, there's still a group of people who control it, but it's way more decentralized than most other assets.
If I may add, like, there's one person who's asking actually, what has Bitcoin done to get to the next level in the past 8 years? I think Julian Flesh was asking. So I think, again, I mentioned before that it's the biggest crowdfunding project and the biggest, trust project, I would say, like in terms of like, how people believe like that it's completely crowdfunded. And one of the examples which David brought up also, like in terms of the the ability to transfer your money without anyone's permission. I want to give you like a very practical example my friend went through. He was trying to move money from New York to Hong Kong. I mean, it's not a huge sum, but we're talking about like 6 to 7 digit now, 2 transactions, and his money they were frozen and with no explanation whatsoever. So we're talking about like that the bank has an ability to put a red flag on any transaction, freeze your money, and that's all. You no longer have possession of your money. That's all. Even if you have on your application, that you still have those money, but you cannot touch them. You cannot do anything with them without proving them that the transaction was legit, providing invoices, etc. Right. So from this particular perspective, if we want to talk about a little bit also about the freedom of choice and ability to control your own assets, I think Bitcoin is like a irreplaceable example. And again, this is an experiment 1.0. We might see completely different new, I would say, surrogate financial assets of this particular type, which is going to be like maybe more profound and more developed, and they will remove all the inefficiencies of Bitcoin. But at this point of time, I agree with with Peter and with Morgan that the least you can do at least to educate yourself and to try buying like a simple portion of it, like just to understand, to have a wallet, like to understand how it works, because I think this is of a paramount importance when we're talking about the potential changes. It's not going to happen overnight. You need to educate a lot of people, and so bear in mind that some people don't have even access to normal internet connection, right? So that's another challenge here if we are solving. And the entire changes in the economy in the world, it's a black swan. Like we have no idea what might happen. Like the right thing that is happening right now, it's going to be like it's going to be peanuts. It's going to be nothing. Like we might see a completely different irrational behavior from your neighbor that you thought like, wow, he's a nice guy. Then he's crushing your house and taking over your cereal. So we don't know what might happen, right? But what we do know that if we prepare, if we actually educate ourselves and we become more again conscious about how the economy, how the monetary system works, I think that gives us unfair advantage of how to even build or use the existing solutions.
I wonder how, when you look at cryptocurrencies, it's a shift, right? And if you go through the history of money, I mean, from wampum to look at travelers' checks, which are now pretty much extinct, right? But that was a form of printing money in its own right. It was a store of value. It had utility to it. I mean, this is just in some respects. I mean, credit cards. Allowed facilitated transactions. I mean, this is sort of part of a long tradition of innovation that goes on in monetary and in payment schemes. Is it really that revolutionary, except for maybe in one way, which is that it's not dependent on an intermediary, right? I mean, isn't that the secular shift? It's decentralized, and so consequently I don't have to depend on somebody else being open for me to do things. Is that fair?
That's pretty fair. Whoever controls the money controls the economy. I don't think Satoshi's original vision was to bring Bitcoin to $10,000. I think it was very, very different goals in mind. Whoever created that, but how it evolved, the fact that it has such high valuation behind itself, with such little technology, to be honest, behind it, just with very developed infrastructure community. I mean, that alone can. That alone is a huge thing, because again, you can control the money, you can control the world. and it seems like it seems like the crypto community can start controlling money to some extent, and that would be extremely exciting.
Well, that was my thing. My thought is that if we do have a catalyst event where there's a governmental collapse, currency crisis, then you're going to have that opportunity for a power shift to occur. And suddenly these pension funds, him and hawing about how they're going to get in, or, oh man, like, we have $1 billion, or $100 billion in assets. How are we going to fit into the crypto market when, that's like a third of the crypto market already? Well, those questions are not going to matter anymore, because their value as far as what they can buy in real terms with that nominal USD is going to be worth nothing. I mean, look at Zimbabwe. Their pension, if a pension fund just has US dollars, which I hate to say it, but a lot of them have just cash because they've already bought everything in the stock market and the moon, then, all that extra value just sitting in fiat is going to go away. It's going to go to almost nothing. And then who do they come to? Well, people with have something that actually can be, transactional and that can actually be moved around cross borders, cross space and time, crypto. So we could end up in a situation like that. There's definitely going to be huge pushback by the, sovereign nations and governments and maybe even military. But yeah, I mean, at the end of the day, it's the golden rule, right? Whoever has the gold makes the rules. And if the gold is digital, it's going to be that much easier to do it.
You also have that whole issue, which people use Bitcoin just as easily to do things that they probably shouldn't do that's not in the people's interest. I mean, it can cut both ways, right? And I've been aware. I was down in Congress it was a couple of years ago, and somebody on the Hill was telling me about over $1 billion in Bitcoin that had been, transferred from Venezuela over to Switzerland, and that they were, tracking, and it was a subject of conversation in some of the halls of Congress, and it was, I think that the inference was that it was somebody who was in this, in the so-called socialist government that was plundering the people's assets and transferring it to, into an account. I don't think that they thought that it had anything to do with the drug trade, or terrorism or anything. They thought it was just people taking money out of Venezuela improperly. And so, you have that, that potential, which is, on the one hand, you have a technology that can be used for great good, but I think it's up to everybody in the community to ensure that it's handled that way. And of course, increasingly, like if you look at crypto exchanges, I think that world governments start to assert themselves and require, the onboarding of clients and traditional review, like anti-money laundering rules, to make sure that identities of people are known before they can transact. And it'll be interesting to see how it develops. But I believe that that there's going to be progressively more governmental order put on top of most of these systems, because I think governments have an innate tendency to kind of self-propitiate themselves, to sustain themselves. And I think what we've got here is just like we did in the ICO phase in 2017. Government plays some catch up sometimes, not understanding the full implications of what's unfolding in front of them. And so, it takes a while the technology is developing for the rules to be written. The United States has been notably slow in that regard. I mean, but you look at what's going on with the law in Switzerland that was proposed recently, to have kind of a parallel ledger. I don't know if you guys paid attention to this, but it's essentially one that would actually create the identity key for each of the blocks where the transactions was occurring. That it's a way that for instance, if somebody loses something, that you could actually apply and just like you do with the security, have it potentially replaced. So, it wouldn't surprise me to see that a lot of the checks and balances that were intended to protect, investors and people and procure safety and interfere with evildoers, that a lot of that, which is a level of surveillance, to be quite frank, is going to be required in many of these systems over time.
If I may, I just need to already jump on another call. So I really appreciate, your views, and, like, I was honored to be in this panel. Just to close, I think we are in a stage where we're still very early adopters, which was mentioned before, and there's a lot of things that need to be proven as a concept, as things that we will actually have those case studies where we change people's lives practically. And once we can have more and more of that, and I think people will, you will not need to talk about it. We'll just showcase examples. So I sincerely wish all the people who are participating in this industry and who are sincerely also working hard to help others and to provide better value, cheaper, faster products with great user experience, as Peter said, and those projects will outperform others. And it's not going to be a matter of, possibility. It's going to be something that happens, to centralize, solutions, enterprise level solutions, and the movement of open source finance, or just open source movement, that people try to centralize every solution on the internet, but they couldn't. The open source won, and it's winning every single day. And as my friend and colleague, Mika Matsumoto said, if you shift the paradigm and you actually start naming it with open source finance, it's going to be easy, because then we're going to just give the freedom to the people, and we will provide them this open source infrastructure. And people will actually dictate what they want best, because it's going to be open to everybody. So I sincerely thank you for this opportunity, David, Morgan, Peter, and all the viewers.
Terrific, Konstantin. Thank you. Is that what, gentlemen? Do you got anything else, or should we wrap it up?
Let's wrap it up.
Buy Bitcoin. That's what we can say. Until we reach 10,000, I got to get that promotion out. We gotta get that back up. We got to get those rookie numbers higher.
To the moon.
And I'll tell you, Morgan, at some point when that institutional money floods into the market, I'm sure that it's going to be a heck of a lot higher than 10,000. It's just a question of when people feel comfortable. But I see that it's sort of like manifest destiny. It's supply demand. Bitcoin did as well as it did because it was being adopted, and people were discovering it, and they were throwing money, and there was a scarcity of supply. So, that's the beauty of it in some regards, is there's scarcity of supply. It's just a question of when it'll move again, and at some point somebody's going to turn the faucet on, and that institutional money comes into the market, and I'm sure it'll have another massive leg up. Anyway. Have a terrific evening, everybody. Thank you for your time. I hope this was helpful, and I appreciate our panelists, Konstantin, Peter, and Morgan. Thank you very much. Have a terrific night.
And really fast, there's a course about the Blockchain Center. Quick thanks to Nick Spanos, Anna Ginsberg, Scott Spiegel, etc. There's a course on Tuesday. Wait, I'm getting more details with the blockchain course. Wait. As usual, we get in that last second. Sorry, guys. Yeah, here we go. Here we go. So yeah, it's going to be July 21st with the UC Berkeley professor Gregory LeBlanc. What time?
It's a 6-week long course.
6-week long course on Tuesday. So check it out, blockchaincenter.com/education.
Students apply online.
Yeah, thank you so much, guys. Appreciate it. Bye.
Thanks, guys. See
Thank
ya.
you, David. Thank you, Mark.
Have a good night. Yeah, appreciate it.